Hello, and welcome to the First Brick Property Podcast, episode 12. And a special hello to our Instagram voters who gave me the privilege of opening the show for you this evening. I have here with me my patchy bearded co-host, KM. How are you going tonight?
I'm good. I've been better. You know, when people weren't mentioning my patchy beard.
Had to be done.
We'll have to. We'll put a photo on Facebook for people to see what
100%.
Yeah, I'm not too bad. So the purpose of the podcast is to bring a casual style show to discuss all things property, with education being the key. Our episodes will range from discussing a variety of topics to having special guests who can share insights into the property world. Whether you're a beginner or a seasoned investor, this show will be able to further your knowledge and really remove any barriers to getting involved in the exciting and fun world of property. So yeah, if you heard that start, Hanny opened the show because we had a poll on our Instagram page who said the hello better, myself or Hanny, and a resounding victory for Hanny. You must be proud of yourself.
Yeah, I think people were just trying to stick it to you, to be honest.
No, I saw the people that voted. It'd be a bunch of randoms, so people that I don't know. So that's good. People that we don't know are voting.
That's good. Show's getting out there.
That's it. We're getting more followers and more listeners. The Pass the Pod movement is working.
Yeah.
But you're going to have to keep opening the show, so don't disappoint your fans.
You might have to do another vote after I do a few opens. We'll see if that vote still stands.
See how we go. How's your week been?
Yeah,
Haven't
good.
seen you since last episode.
Yeah, working from home. Just getting used to it.
Yeah.
WebEx and Cisco and all that, all these new words that everyone's hearing about.
Everyone's expert.
Good. Yeah, it's good fun.
Yeah.
Yeah.
We've been doing a lot of conference video calls as well.
Yeah.
It's just it's not bad.
Yeah, Zoom's taken off.
It's good when you can mute it and go for a walk.
Yeah.
Come back. Hopefully you haven't missed anything.
Yeah.
We'll get into the episode. So today's episode is inspired by a question that we got sent in, and then you kind of said, why don't we do it as well? And you didn't know that the question got sent in, so I thought, why not? So I guess it's pretty much an episode, a general guide of the associated costs with purchasing a property.
Yeah.
And it is a general guide. It depends on your situation. The numbers may vary. We'll use some general numbers just for examples, but it does all change slightly, the actual numbers.
Yeah.
And depending on the state you're in, certain things might happen at different points in time.
Yeah.
But just a general guide, so you're not shocked or surprised when.
Because there is a fair bit that goes into the purchase of the property. There are a few steps that take place. There is a significant outlay of money.
Yeah.
So we just thought it would be a good idea to run through it very briefly.
Cool. So I guess we'll try and go in order of when the costs and arise in the property purchasing journey.
Yeah.
Again, certain things will come up at different points in different states, but for the most part, this is pretty similar across the country.
Yeah.
So I guess we could use a theoretical example if we were purchasing a house at 500 grand, nice easy number. The first cost, I guess, or the first bit of capital you gotta, I guess, outlay is your deposit.
Yep.
So we've spoken about deposits in a lot of our episodes. The general rule of thumb is you need a 20% deposit, which would be $100,000 in this case.
Yep.
Or if you're in the medical field or other fields where you don't pay LMI, it would be 10%.
Yep.
But you could also only have 10% deposit and pay LMI if you didn't have a big enough deposit. So if you're with a 10% in this case, you would be looking at $50,000. So step one, I guess you got to have your 50 grand for your deposit at the minimum.
And that's a really good point that you mentioned, because not a lot of people know that there are professions out there where the LMI fee gets waived, and it's not just the medical profession. There are things like chartered accountants, lawyers, barristers, some engineering, even some mining jobs. So do some research if you think you fall into one of those fields.
Correct.
And you can get LMI waived. For those of you that don't know, LMI is an insurance charged by the bank, and it gets charged if you have less than a 20% deposit. And generally, it just gets capitalized onto the loan, but it's still a cost that you have to pay. So if you've got less than a 20% deposit, check to see if you fall into one of those professions to get the LMI waived.
Yeah. Just ask your broker as well, and they should be able to tell you if you can get it waived or not.
Yeah.
If you were not getting it waived and you were added 10%, and that LMI, like you said, in New South Wales works out to be about $7,500. And like you said, gets capitalised. There are situations where you could pay it outright as well.
Okay.
At settlement.
Yep.
And so they essentially take that 7.5 off your loan balance. But I guess the better way is to capitalise it, obviously.
Yeah. And different banks charge LMI differently because it's based on who their insurers are in this case. So if you are up for LMI, it might be worth doing some research and some shopping around to see if you can get cheaper LMI, because it isn't the same across the board.
Yeah, cool. So first we got our deposit, and then any LMI if you have to pay it, and then the rest of that comes from the loan. So the remainder of your purchase price, I guess, comes from the loan.
Yeah.
Moving on, depending on the state that you're in, it could change again. So we'll just keep this to New South Wales, where we're based.
Yeah.
The next step, usually, you found your property, you've got your deposit ready, you've got the rest of the loan ready from your bank. Next step is you want to do your building and pest inspection. Now, this building and pest inspection is incredibly crucial. You wouldn't believe how many people do a building and pest don't do a building and pest inspection and buy a property. A lot of people don't even know what it is, and essentially what it is you're sending a qualified builder that works for a building and pest inspection company that also is aware of looking for pests, and they will go around and do a comprehensive inspection on the property to make sure there are no, or they will see if there's any damage, if there's any issues, structural issues, even minor issues, cables flaring, small leaks. They'll look for everything. And the big one as well, that what they'll look for is termites. So termites is a big thing that they'll look for. And then you get a report which outlines every single thing that they found or not found. So they'll say, room 1 was great, no issues here. Room 2 had a slight crack here. Room 3 had this. Subfloor is about to fall over. Little things like that where you have just to make, and it's crucial because this will cost you about $450. And can save you hundreds of thousands of dollars.
And in the context of purchasing a $500,000 property, and most likely more in most cases. And I guess you need to manage your expectations. You need to understand that when you're purchasing, it is likely that you will do this more than once. So, you could be out, $1,000, $2,000, whatever it may be, but it's still worth it every single time to purchase this report.
It's. I would never ever purchase a property without doing a building and pest. And if for whatever reason there wasn't time to do one, and it was a great property, I would miss out on that property. That's how important the building and pest inspection is. And like you said, you might be doing it a few times over. If you miss out on a few properties or the building report comes back bad for whatever reason. But for example, in Brisbane or in Queensland, you can actually do the building and pest at a later stage, and you can do it after you've gone into your cooling off period. And that's a good way to, you've settled everything. You're going to get you're going to buy the property as long as your building and pest is okay. Rather than doing the building and pest and deciding whether you still want to go for it. So different states have different rules around it. So take advantage of it. The other thing with the building and pest inspection is it's a good way to negotiate. So we've agreed that this house is $500,000. That's what we're buying it for. And when the building and pest inspection report comes back and says there's 10 grand worth of work, you might be able to get that 10 grand off the purchase price. Or you might get the vendors to do the work for you. It's $450, and it could save you so much money. So that would be the next step in New South Wales.
Alright, the next thing you'd do is you'd engage a solicitor. and that's generally paid at a later stage at settlement. But it is something that you need to keep in mind. You obviously need to have one.
Yeah.
I guess some people do decide to do conveyancing themselves.
Yeah.
But generally speaking, you would engage a solicitor or a conveyancer, and you'd generally know how much that would cost, and you'd put those funds aside for payment at settlement.
Yeah. So we engage a solicitor, and that's so they can go through the contract.
Yeah.
And then they'll go through and make any changes they need to with the vendor's solicitors as well. But once we've engaged a solicitor, we've got our contract, and the solicitor is pretty okay for you to go ahead. Your building and pest is cool. You then usually sign the contract.
Yep.
And you pay a 0.25% deposit, and
Yep.
that is essentially a holding deposit.
Yeah.
Once you've paid that 0.25%, which in this case would be $1,250, you then enter into cooling off period. That cooling off period, I think we spoke about it last week or 2 weeks ago,
Yeah.
is essentially that time that you have between signing and then actually going ahead with the purchase,
Yeah.
where you can cool off and see if you actually want to buy the property.
Yeah.
Sometimes you get rushed into it with the
Too
agents
excited.
too excited, whatever reason. You're a bit heated, and then
Yeah.
you're cooling off and you realize this wasn't the one for me, so you can pull out of
Yeah.
that. And that 0.25% is generally refundable.
Yep. And then after that, so the cooling off period ends, you
Yep.
exchange contracts, and that at that point you'd have to pay a 5% deposit. So in this case, for a $500,000 property, you're looking at $25,000, and the property is considered under offer.
Yeah.
So just take note that these costs are deducted from the deposit amount owed. If it's an auction, this amount is usually 10%, which is about $50,000. But just keep in mind that after the cooling off period ends, you do need to have that cash available to transfer it into the agent's trust account as a 5% deposit on exchange of contract.
Correct. So your cooling off period generally 5 working days,
Yeah.
and then the that next day after you'd pay your 5%. That 5% also can be negotiated, can be less, can be more. So it's not a strict rule 5%, but the general number is 5%.
Yeah.
One more thing, we'll just go back to the 0.25%, the holding deposit. This doesn't apply at auctions, and cooling off doesn't apply at auctions either.
Yeah.
So if you purchased a property at auction, and you bought it while you were heated, unfortunately you're paying your 10%.
Yeah.
So you're not cooling off. You better keep running with your momentum.
Yeah.
You pay 10% there and there.
Yeah.
Then end there.
All right. So after that, if you've engaged a buyer's agent on exchange of contract, usually that fee is payable to your buyer's agent. I guess some buyer's agent might charge differently. I'm not really sure exactly how it works, but at this point, you're probably up for your buyer's agent fee.
Yeah, most buyer's agents take the fee at exchange of contract.
Yeah.
At the end of the exchange of contract. Some will take it at settlement with solicitors and the rest.
Yes.
But most do at exchange of contract. So if you engage in a buyer's agent, which we highly recommend,
Absolutely.
that's when you would make that payment.
Yeah.
Next thing is, so you've gone through your cooling off period, you've paid your 5%. You want to start getting your insurance in order for when settlement day comes around. So the insurance that you want to get is building insurance at the minimum. If you're an investor and you're going to have tenants in there, you want to get landlord insurance as well.
Yeah.
Might be a bit difficult at the moment, as we discussed last week, but building and landlord insurance is the two main ones that you want to get. If you're living in the property, you might get contents and different stuff, but building and landlord at the minimum, and that usually costs around $1,500, give or take, depends who you use and what you're covered for and how much your house is and all the rest. But
and this is really important because it's you always want to make sure the property is insured throughout the whole process. So in addition to organizing your own insurance for settlement onwards, you want to ensure that the person you're purchasing off hasn't cancelled their insurance as well.
Yeah.
And you'll be surprised how often that happens and the disasters that could occur in that situation. So insurance is really important. It's a typical example of someone who buys a car, drives it out of the dealership before they get insurance and has a crash on the way home.
Yeah.
You do not want to get caught up in that. It's really important to ensure that the insurance is in place at all times, and even going the extra mile to ensure that the vendor keeps their insurance up to date throughout the whole process.
Yeah, that's a very good point. So your solicitor should be checking as well to make sure that the vendors have insurance up until at least settlement.
Yeah.
I think it's a requirement. I'm not 100% sure.
Yeah.
But it's something, and what I always advise to my clients is to activate your insurance a few days before settlement.
Yeah.
Because it is a grey area. If we've passed the cooling off and we've exchanged contracts and settlement is next week and then the house burns down,
Yeah.
who is liable?
Yeah.
It is a grey area. Legally, you haven't settled, so you don't own it yet.
Yeah.
But it's just a very grey area, so it's just better to protect yourself and
Yeah,
have
of
that
course.
insurance.
It's still your house. It's
That's
still
it.
going to be your problem in the long run.
Correct.
And it didn't come down to a few days of
Yeah.
insurance. Yeah.
So you just start a bit early. That $1,500, you can pay up front or you can pay monthly fees,
Yeah.
monthly installments.
Yeah.
But about $1,500 for that.
Yeah. All right, and then we reach settlement time. So your deposit balance is paid. In this case, at 10%, you're looking at $23,750. The all infamous stamp duty is payable.
Yep.
So about $17,932 on a $500,000 property. All your mortgage fees would get added on. Approximately $500 to $750 depending on your bank. And at this point, LMI would get added onto your loan as well.
Yep. That's also at settlement time. You'd also be paying your solicitor fees,
Yep.
which usually they're around $2,000, give or take. Depends on what searches they've had to do
Yeah.
and whatnot. If you use a conveyancer, it's a little bit different. And then, depending on where you buy, you usually would have to pay council water and sewage rates at the start.
Yeah.
It comes to about $500.
Yeah. It just gets apportioned
Yes.
based on the time of the month or the quarter that you purchase.
Yeah.
So it gets apportioned between the purchaser and the seller.
Yeah. So if you buy at the end of the year compared to the start of the year, it might be a little bit different. But yeah, give or take about $500, I guess.
Yeah.
It's a decent amount. So in summary of your, I guess, upfront capital that you need for this example, if you're purchasing a property at $500,000, your loan deposit was $50,000, your building and pest was $450, and then you have your buyer's agent fee if that's applicable. Your insurance at about $1,500, your stamp duty $17,930, your mortgagee fees about $500, and those are pretty much a fee to get your mortgage set up and some paperwork.
Yeah.
Your solicitor $2,000, rates $500. It comes to about $72,882.
Yeah.
That's probably the minimum upfront capital you need.
At least, yeah.
And that's to purchase a $500,000 investment.
Yeah.
Property, sorry. So $72,000 seems like, I don't know, might seem like a lot to some, but you have paid, I guess, less than 10% of the asset that you've purchased.
Yeah.
20%, less than 20% of the asset that you've purchased, which is a huge leverage.
Yeah.
So power of leverage is massive here. So, I guess it's just good to whoever that person that asked the question will now have a breakdown of all the costs you need to get ready for, and now we hopefully the costs and there's no sneaky surprises when your solicitor sends you your payment summary.
Yeah.
So
Of course, it goes without saying, but just you need to be really organized. Keep all your paperwork, all the dates, all the costs. It's amazingly important.
Yeah.
Especially if it's going to be an investment property. And, it seems very basic. Of course, we're going to keep this paperwork, but you're going to keep this property for 5, 10, 15, 20 years. And particularly if it's an investment property, you're going to need all these details as evidence when you come to sell it to calculate your CGT.
Yeah.
So definitely keep this on hand. And even if you're going to live in the property. If you eventually rent it out, you're going to need these costs again when you come to sell it. Because even if you lived in the property when you first moved in, if it becomes an investment property, there are capital gains tax consequences. And you will need these costs, including all the interest that you've paid, all the bank fees, all of that. And a lot of people don't realize it. And it becomes a huge problem when you come to sell.
Yeah.
Because it all adjusts your cost base, which is your purchase price. So even if you've lived in the property as your principal place of residence, you will still need all of this stuff when you come to sell if it becomes an investment property at any point.
Yeah.
And it's to your benefit to have this.
Yeah.
Yeah.
It will help also with your yearly tax time.
Yeah.
Getting all the numbers out to check everything. And for every single property, you're going to need to have all this stuff down. So it does sound like a simple step.
Yep.
Henny's actually the master organizer of paperwork. He showed me a way to organize my paperwork and my receipts and stuff. It was actually quite handy. You have to do
I learned the hard way, unfortunately.
You have to do a YouTube video on how to organize your
That
stuff.
sounds like a lot of fun, as sad as that may be.
That's the tax man talking. So if anyone was wondering how we made our calculations, as always, most of our calculations were made through the Property Calculator Australia app. Again, free app, fantastic app. Download it, Android, Apple, whatever you use, it's available. It is simply amazing. And some of the other costs like building and pest whatnot came from our network, so they may vary depending on who you speak to, but just a rough guide. Anything to add?
No, I think that's
Doctor?
it. Yeah.
Okay, so thanks for tuning in, guys. You can find all of our content on our socials: Facebook, Instagram, YouTube, LinkedIn, TikTok. Just search First Brick Property. All our podcasts are now on YouTube as well. So if you don't have Spotify or Apple Podcasts, you can find us on YouTube as well. If you have any topics you'd like discussed, like what we did today, or any questions, just send us a message at hello@firstbrick.com.au or shoot us a message on our social platforms. If you enjoyed the episode, we'd love a review. This helps us get higher up in the charts and allows more people to find us and listen and learn. So send us your 5-star reviews, please. Pass the pod movement, keep doing it. Our numbers keep growing, so just let one person know that you think would enjoy our podcast. Buying property is our passion. Helping you do it is our mission. Thanks.